The bombs have fallen. The dictator has been captured. And as of this morning, silver has exploded higher by 4.4% in a single trading session. This is not a drill. This is not a simulation. This is a real-time market reaction to one of the most dramatic geopolitical events of the decade. The United States of America has conducted military operations against Venezuela. President Nicolás Maduro and his wife have been seized and transferred out of the country. They are expected to appear in federal court. Washington has issued warnings that further military action remains possible if interim authorities fail to meet American demands. And the precious metals market is responding exactly as it should. Capital is fleeing from paper assets into hard assets. Investors are seeking protection against escalating geopolitical chaos. Silver is surging. Gold is surging. The entire precious metals complex is being repriced in real time as the world recognizes that the era of stability is over and the era of uncertainty has begun. Welcome back to Veiled Wealth, where we uncover the stories the mainstream media tries to bury. Today, we are looking at the mechanics of a safe haven panic. Let me give you the numbers because the numbers tell the story. Silver is trading around $75.82 as I record this broadcast. That represents a gain of 4.4% in a single day. This is not a gradual move. This is not a slow grind higher. This is an explosive gap up driven by pure safe haven demand. The white metal is outperforming gold on a percentage basis, which tells you that the smart money is recognizing silver's unique value proposition. Gold is up 2.12% to $4,433. U.S. gold futures for February delivery rose 2.1%. Platinum advanced 2.2%. Palladium gained 1.8%. The entire precious metals complex is moving in unison. This is broad-based strength that cannot be dismissed as speculative froth. This is institutional capital repositioning for a world that has suddenly become much more dangerous. Let me walk you through what happened over the weekend, because the mainstream media is only giving you fragments of the story. U.S. President Donald Trump announced the capture of Venezuelan President Nicolás Maduro. This was not a diplomatic negotiation. This was not economic pressure. This was military intervention in a sovereign nation. Maduro and his wife have been physically removed from Venezuela and are being transported to appear in federal court on what are presumably drug trafficking or terrorism charges that have been pending for years. The Venezuelan government, whatever remains of it, is in chaos. Interim authorities are attempting to establish control. And Washington has made clear that additional military operations remain on the table if American demands are not met. This is regime change. This is the projection of American military power in Latin America for the first time in decades. This is a signal to every nation on earth that the United States is willing to use force to remove governments it views as hostile. And the implications for global stability are staggering. Other nations are watching. Other adversaries are calculating. The risk of escalation, of retaliation, of cascading conflicts is higher than it has been since the Cold War. China has significant investments in Venezuela. Russia has military advisors there. How will they react? The market hates uncertainty, and right now, uncertainty is the only thing on the menu. In this environment, there's only one asset class that has consistently protected wealth through wars, revolutions, and geopolitical crises. That asset class is precious metals. That asset class is silver and gold. Tim Waterer, the chief market analyst at KCM Trade, was quoted explaining exactly what is happening. He said that renewed turmoil in Venezuela has strengthened demand for defensive assets. He said that gold and silver are benefiting as investors seek protection against escalating geopolitical risks. This is not complicated. This is not mysterious. When the world becomes more dangerous, rational investors move their capital out of vulnerable paper assets and into tangible stores of value. Here at Veiled Wealth, we have been warning about this scenario for months. We told you that the debt-based system requires conflict to distract from the monetary debasement. We told you that resource wars were coming, and now they are here. But here is what makes this moment particularly significant. The Venezuela surge is happening on top of an already extraordinary bull market in precious metals. Silver did not start the week at depressed levels. Silver started the week having already gained 147% in 2025. Let me repeat that number because it is almost unbelievable. 147%. This is the strongest annual gain in silver's recorded history. This surpasses the Hunt Brothers squeeze of 1980. This surpasses every previous rally in the modern era. Silver reached an all-time high of $83.62 on December 29th, just 1 week ago. The metal has pulled back from those highs as index funds conducted their forced rebalancing, but the fundamental picture never changed. The supply deficit never resolved itself. The industrial demand never diminished. The monetary debasement never reversed. And now, with geopolitical crisis adding fuel to the fire, silver is resuming its march higher. Let me address the monetary policy angle because this is the other pillar supporting precious metals prices. The Federal Reserve has been cutting interest rates aggressively. Investors continue to price in at least 2 more rate cuts this year. Lower interest rates reduce the opportunity cost of holding non-yielding assets like silver and gold. When you can earn 5% in a treasury bond, there's a real cost to holding metal that pays nothing. But when rates are falling, when the Fed is easing, when the trajectory is towards zero or even negative rates, that opportunity cost shrinks. Capital flows toward precious metals because they offer something that paper assets cannot provide. They offer protection against currency debasement. They offer a store of value that cannot be printed by central banks. Philadelphia Federal Reserve President Anna Paulson attempted to push back on this narrative over the weekend. She said that additional rate cuts may not come quickly following last year's easing cycle, but the market is not listening. The market is looking at the trajectory of the economy. The market is looking at the weakness in employment data. The market is looking at the strain on the banking system. The market is pricing in cuts because the market believes cuts are coming. And as long as that expectation persists, precious metals will have a monetary tailwind at their backs. Now, let me talk about why silver is outperforming gold on a percentage basis, because this is critically important for understanding the opportunity in front of you. Gold is the senior monetary metal. It is the reserve asset that central banks hold. It is the first destination for safe haven capital during a crisis. But silver has characteristics that gold does not. Silver is an industrial metal as well as a monetary metal. Silver is essential for solar panels, electric vehicles, electronics, and medical devices. Silver has been designated as a critical mineral by the United States government. Silver has supply constraints that gold does not face, and silver is much smaller as a market, which means that when capital flows in, the price moves more dramatically. The 4.4% move in silver compared to the 2.1% move in gold illustrates this leverage effect. When investors are buying the precious metals complex, silver amplifies the move. This is why silver is often called the rocket fuel of the precious metals market. It goes higher, faster during bull markets, and it can also go lower faster during corrections. But we are in a bull market. We are in an environment where every fundamental factor is aligned for higher prices. Let me discuss the supply side, because this is where the fundamental case becomes truly compelling. Silver inventories are at record lows. The vaults in London and New York have been depleted by years of consecutive supply deficits. The Shanghai Futures Exchange premiums have reached unprecedented levels as Chinese buyers compete for physical metal. The mining industry cannot keep pace with demand. The refineries are running at capacity. And now China has implemented export restrictions that will further tighten the global supply chain. And the physical market is screaming that there is not enough silver. This is why Veiled Wealth emphasizes physical ownership, because you cannot deliver metal that does not exist. And when the delivery failures begin, the price will gap higher in ways that will shock the financial world. The industrial demand picture is equally bullish. Solar panel installations are accelerating globally. The energy transition requires massive quantities of silver for photovoltaic cells. Electric vehicle production is ramping up. Every EV contains more silver than a traditional internal combustion vehicle. AI data centers are being built at unprecedented rates. Every server, every connection, every piece of computing infrastructure contains silver. This is why the United States government designated silver as a critical mineral in November. Washington recognizes that silver is essential for national security. Silver is essential for the electrical grid. Silver is essential for the defense industry. Silver is essential for the technologies that will define the 21st century economy. And yet, despite this recognition, the United States produces very little silver domestically. The strategic vulnerability is obvious. The implications for price are equally obvious. Now, let me give you the technical picture, because the charts are confirming what the fundamentals are screaming. Silver pulled back from the 83.62 all-time high to approximately $72 during the index rebalancing last week. That correction represented a healthy consolidation after a parabolic move. The relative strength index cooled off from extreme overbought territory. The moving averages caught up to price. The market needed to breathe. And then Venezuela happened. The geopolitical catalyst reignited the rally. Silver gapped higher to 75.82. The correction is over. The next leg higher has begun. The key support level now sits around $72 to $73. This is where the index rebalancing found buyers. This is where the physical demand absorbed the paper selling. If silver pulls back again, I expect this zone to hold. The key resistance level is the all-time high at 83.62. A break above that level puts silver into uncharted territory. There is no historical resistance above 83. The price can run as high as the supply constraints dictate. Triple-digit silver, $100 per ounce, is very much on the table if the current dynamics persist. Let me address what to watch for in the coming days, because there are additional catalysts on the calendar. Later today, the ISM Manufacturing Purchasing Managers Index will be released. This is a key indicator of economic activity. A stronger than expected reading could temporarily support the US dollar. A weaker reading would reinforce expectations for Fed rate cuts and support precious metals. Later in the week, the non-farm payrolls report will provide the most important data point. Economists expect approximately 50,000 new jobs added. This number will be closely watched to refine expectations around monetary policy. The employment data will create volatility, but the fundamental trend is unmistakable. Precious metals are in a secular bull market that will persist regardless of any single data release. The broader context matters enormously. We are not living through a temporary period of elevated uncertainty. We are living through a fundamental restructuring of the global order. Let me talk about positioning, because understanding the situation is useless if you do not know how to act. And this is the core philosophy here at Veiled Wealth: action over observation. If you already own physical silver, hold it. Do not sell into this strength. Do not trade your hard asset for paper dollars that are being debased by the Federal Reserve. The gains you have seen are just the beginning. The Venezuela surge is a reminder of why you own precious metals in the first place. When the world goes crazy, your silver protects you. If you do not own physical silver, you need to start accumulating immediately. I understand that the price seems high compared to where it was a year ago. I understand that $75 feels expensive compared to the $25 we saw a few years back. But value is relative. Value is contextual. Silver at $75 in a world of unlimited money printing, restricted supply, insatiable industrial demand, and escalating geopolitical conflict is cheap. Silver at $75 when China is locking down exports, when inventories are at record lows, is cheap. The expensive silver is the silver you do not own when the price goes to $100, $150, $200. The expensive silver is the silver that is not available at any price because the supply has been exhausted. Let me give you the risk analysis, because every investment has risks. The primary short-term risk is a rapid de-escalation of the Venezuela situation. If Maduro's capture leads to a quick resolution, the safe haven premium will compress. Silver could pull back toward the 72 to 73 support zone. This would not be a disaster. This would be another buying opportunity. The secondary risk is a stronger than expected dollar rally. If economic data surprises to the upside, it could create headwinds. But the Fed is committed to cutting rates. Any dollar strength will be temporary. The tertiary risk is additional margin increases by the CME. The exchange raised margins to $25,000 per contract during the recent volatility. They could raise them again if silver continues to surge. Higher margins squeeze out speculative longs. But this is a familiar tactic. It creates dips. It does not change trends. The smart money uses margin-induced dips to accumulate. Let me conclude with the bigger picture, because this is what ultimately matters. We are witnessing the repricing of precious metals for a new era. The old era was characterized by relative stability, low inflation, abundant supply, and complacent investors. The new era is characterized by geopolitical chaos, monetary debasement, structural supply deficits, and investors who are waking up to the value of hard assets. Silver is at the center of this transition. It is both a monetary metal that protects against currency debasement and an industrial metal that is essential for the technologies of the future. There's no substitute for silver in solar panels. There's no substitute for silver in electronics. There is no substitute for silver in medical devices. The demand is non-negotiable and the supply is constrained. Venezuela is just the latest catalyst. There will be more catalysts. There will be more crises. There will be more events that send capital rushing into precious metals. Each one will push the price higher. Each one will deplete the remaining inventory. Each one will validate the decision to own physical silver. The trend is unmistakable. The direction is clear. The opportunity is now. The United States just captured the president of Venezuela. The world is responding. Silver is surging. Gold is surging. The entire precious metals complex is being repriced for an era of permanent uncertainty. If you're not positioned, if you're not protected, if you are not holding physical metal, you are vulnerable. You are exposed. You are at the mercy of events that you cannot control. Do not be caught off guard. Do not wait for lower prices that may never come. Do not let the manipulators shake you out. The safe haven bid is real. The fundamentals are overwhelming. The geopolitical tailwind is accelerating. Silver at $75 is not the end of the rally. It is the beginning of the next leg higher. Hold your metal. Accumulate on dips. Trust the thesis and never ever sell your physical for their paper. The war has begun. The surge is underway. Position yourself accordingly. Thank you for watching Veiled Wealth. If you found this analysis valuable, hit that like button and subscribe for more unfiltered financial intelligence. Until next time, stay safe and keep stacking.